3, 2, 1. I had Jerry on mute just in case.
He took me out of the doghouse, man. That's funny. All right.
I always got to do that.
Can you hear me?
I can hear you.
Okay.
Guess what?
You can hear me?
They can hear you too.
Okay, good. Because we're past the 10-second line. Got it.
We are.
I'm learning.
We count our way in, and I go hot with the mics, and as soon as I do, Jerry throws an F-bomb.
I'm going to try not to do that today. All right.
What do we got going on this week, man?
Well, it's pre-Christmas week, and
oh man, you know what?
yeah.
I was supposed to get all my shopping done, everything. I got nothing better to do.
Right?
Sitting at home with COVID, nothing but nope, still haven't done it.
Yeah.
Oh well.
I'm pretty well on the way, but it is kind of early Christmas here at TSP. We got actually when we came in this afternoon, our landlord was just leaving the office. You can't see it from here, but
I should have put them up here, but they would have blocked the whole shot.
Yeah, they gave us this box of Bordeaux wine, 90+ points. Pretty sweet.
Yeah.
We'll have to.
I don't know what that means. I'm a bourbon guy.
Yeah. Well, me too. As you know.
I know. We know what it means, but we're not sure which one to drink first.
Yeah. And
it's a bunch of good red wine.
Yeah.
That.
We also got this cool hat from a huge fan of the show.
Oh, nice.
Grow My TSP, right? Very sweet. So
we're living the dream.
we are. Okay.
What do we got?
Weekly update, 20 December 2020.
I was hoping it was a Jimmy Buffett quote.
Yeah,
another
you know
Warren
what?
Buffett.
We need more. We need some Jimmy Buffett quotes, no doubt about it. But it is Warren Buffett, and I don't recall. Honestly, I don't remember if I got like our number one rule is don't lose money, right? And our number two rule is you have to be in the stock funds when the market's going up, otherwise you don't grow your TSP account.
Right.
I seriously don't remember sort of plagiarizing Warren Buffett on this.
No, I mean, I know we didn't because we just started saying it. You know, we never really, it never came from anything. It just kind of, poking at it, trying to get it down to like bullet points.
Right.
You know, I mean, that's what I remember was like kind of just like, all right, we got to have some like sentences that explain, whatever. Yeah.
And that is, I mean, as you know, I'm really conservative, right? So my number one rule is don't lose money. Yeah. And I know that we have to be in the stock funds to make money. So those are why the two rules are there. And then today when I was out looking for quotes for the slide, I came across this site.
His number one rule?
Yeah, his number one rule is never lose money, which doesn't surprise me because he's the ultimate conservative investor.
Yeah. His rule number 2 is different from ours, though.
It refers you back to rule number 1, which makes sense for him. The second part of that, though, so like what does the rule actually mean for him? So never lose money. Stay rational and stick to your homework when researching businesses in which to invest. So, for those of you that don't know, Warren Buffett, it's not that he never uses technical analysis, but he would not call himself a technical analyst. He's a fundamental analyst. Mm-hmm. So he buys companies when they're really cheap and holds them until they get more valuable. That's what a fundamental investor does.
Yeah, most people can't afford to buy a company.
True. Most of us that are very true.
I mean, because you say buying the company, that could mean buying stock in the company.
Yes.
But generally for him, it's buying the company.
Well, for him, it's buying the whole company.
Right. And so that's great and all. Right. But that's not practical.
But for us, if we were fundamental investors, yes, it would be buying stock in that company.
Yeah.
Same principle, same idea.
Yeah.
But yes, it would be buying stock.
And that's
probably not the whole company.
Honestly, that's where because I probably like most everybody else, when I came into kind of starting to understand investment analysis, I started with fundamental analysis because that's what you see everyone doing.
Right.
And then what I learned over time is that, well, that's great if you know enough about the company. If you're buying the company, like the entire company, you have a lot more knowledge about the inner workings of it.
Absolutely.
Because you're going through a purchase of it, right? So there's no way that Warren Buffett is just using, Bloomberg TV to figure out.
No,
right?
No. He creates the content for Bloomberg TV.
Yeah, exactly. Yeah. So I just it put it in perspective for me. Like if I was out there buying companies, of course, fundamental analysis, I think would be just as important as because who's the leadership,
right.
What's
all
the product
things.
lines, like all those things that are fundamental analysis. But when you're out here just looking at stock charts or just trying to think of like, well, how do I do fundamental analysis? How are you going to get that inside
You can do it.
information?
You can get.
It's not inside information.
It's not. But it's hard. It's all public. You can get earnings, and
it's a lot of work.
It's a lot of work.
It's a lot of work.
And there are a lot of people that do it and do it really well.
I like looking at 10-day moving averages.
It works for me. I don't know.
Yeah.
You know, there's a lot of ways, as we always say, there's a lot of ways to play this game.
This is our way.
This is our way. So, and the link at the bottom, www.rule1investing.com is a guy that put a site together all about Warren Buffett and the way he invests. So it's pretty good if you want to go check that out.
Sweet.
Okay. The market this week. Market continued to roll higher. C fund's up about 1.25%. S fund was up again. S fund is crushing it. Over 3.5% for the week. I fund up 1.66%, and F fund down again 0.1%.
I'm going to ask the question everybody's ready to ask.
What's that?
Then why are we not in it?
Oh.
You're going to get.
We're going to get to that. Yeah, we're going to get to that. Pretty volatile week. The S&P 500, which is the C fund, ranged from a low of 36.46 to a high of 37.26. So throughout the week, that was the weekly high and low range, and finally closed on Friday at 37.09. Late Friday, I did not do a chart, an intraday chart of this week or specifically Friday, but in the last 20 minutes of trade on Friday, the market turned around and regained probably a third of the losses for the day. Because we were talking about it earlier in the day. If the market had closed in the same trajectory, basically that it was at 2 o'clock, it probably would have been below the 10-day moving average. But the last 20 minutes, it rocketed back up. So it'll be really interesting to see what happens on Monday.
I don't want to go down a rabbit hole here, but at some point it'd be nice to kind of take a look at that, right? What caused that? Because something had to have caused that. That wasn't just it didn't just happen, right? I mean, to shoot up that much in the last 20 minutes of the day,
right?
Is it, did it just happen, or was it a large group of investors kind of jumping back in to kind of push it back up, or
most of trading, I mean, 90% of it is, it's like not algorithmic. It's I can't remember the term right now. It hits certain levels and trades trigger automatically. So it's
so a lot of stuff was just sitting there waiting. It triggered and then bam.
Right. It's not people looking at it.
It's not a person pushing a button.
No.
It was a person that made a decision for their line in the sand, if you will.
Right.
And then all of it executed because it hit a certain point.
Right. That's generally how it works.
Yeah. That makes more sense.
But it matters. So what that means is there was the line in the sand. It's algorithmic trading. There was a line there, and a lot of people were betting the positive side of that line as opposed to the negative side of that line. So there was going to also be, if the price had gotten down to a certain level, there would have been a big spike down. Right.
A lot of people jumping out because it hit a certain point. Right.
Right.
Yeah,
so
makes sense.
There's still a lot of buyers in there that are basically, it's buying the dip. People set the line there, and when it hits it triggers a buy, and they're buying the dip. So that's sort of indication that that's still the mentality that's out there right now, is buy the dip.
Mm-hmm.
So we'll see what happens on Monday.
Buy the dip meaning they are betting, because they are betting on the fact that Monday it's going to be
it keeps
up,
going higher.
Yeah, and then so they hit it at the bottom.
Right, and some of that might refer back to the last chart, not the last chart, but the last slide that we're going to do today. That
but all the technical indicators are telling us something.
Yeah, we're going to talk about the technical indicators, but a preview of the last slide. We are approaching the Santa Claus rally.
Ooh,
and that is a real thing.
It is.
And I'm going to actually next.
Santa Claus is real.
Everybody knows that.
Yeah.
It must be real. We're able to do this for a living soon, hopefully. We're going to do the Santa Claus rally thing next weekend on the
Okay.
on the next show.
Oh,
I got
looking
4 or
forward
5
to that.
slides that Investors Business Daily did a really cool infographic slideshow of that, and I'm going to cut and paste and steal their stuff. I'm going to give them all the credit.
Yeah.
But
It's
I'm
not stealing if you tell them who did
exactly.
it.
And it was Investors Business Daily.
There you go.
Okay. So, yep. Late Friday, we had an important test of the 10-day moving average, and once we hit that 10-day moving average, that was really the line. You can see it rocketed right back up in the last 20 minutes of trading. So we're going to look at the long term to get a long term perspective, the medium term, and the short term charts. First, we're going to do the focus is kind of going to be on technical indicators deep dive. So we had a bunch of people asking about specifically the RSI and the MACD and how we use them relative to price and the chart. So we're going to talk about that. And then our medium term chart is the chart that I'm using right now for what we called last week the dead reckoning. And I'll explain that when we get to it. Okay. So relative strength index. The RSI, it's a momentum oscillator, right? So it measures speed and change of price movement. And the way you get it, the relative strength is the average gain divided by the average loss over a 14-day period. Okay, I'm not going to get too geeky into the math, but the index, the way you make it an oscillator, the relative strength is pretty simple. Average gain divided by average loss over a 14-day period. The way you make it into an oscillator, to make it from 0 to 100, as you take RSI equals 100 minus 1 over 1 plus the relative strength. And that enables you to see it in a graph form from 0 to 100. So,
which thankfully the chart program does that for us.
Right.
We don't have to do that math.
No, I don't do that math.
Every time you say oscillator, I think of flux capacitor.
Wasn't that 2020?
Yeah. In the DeLorean at the time.
Yeah. He's like, in 2020, this is what's going to happen. Good Lord. Okay, so when the average gain is 0, the RSI is 0, right? That means if over a 14-day period, every day there were no gains, then the RSI would be 0, right? And every day, if there were gains every day for 14 days, the RSI would be 100. So it's the relative strength index. It's not relative to another index. It's relative to itself over a 14-day period, right? Okay, so since we can look at it from a 0 to 100 oscillator, it's considered overbought when the number is over 70 and oversold when the number is below 30. Okay, to get a super deep dive into all this, if you go to stockcharts.com and you click on it's chart schools or stock school, something like that. Click on that link. You don't have to be a subscriber to Stock Charts to get it. And there's everything you ever wanted to know about about charts and technical analysis is in Stock Charts. Their school tab is amazing. Okay. So how does that really apply to us is, zoom in on this a little bit. Let's do this part first. Okay. So you can see right here, we're looking at McDonald's. And whenever we're at a high, anytime where the vertical dotted lines, right? If they're green, it's a low, and if they're red, it's a high. So you can see down here in August, we hit that 30 oversold level, and the market turned back up. In the middle of September, we were at an overbought level. The market didn't turn up; it didn't roll over. It continued to go higher. So there's not a direct correlation between the relative strength and the direction necessarily of the market. It's a momentum indicator. It doesn't mean this is what the price is necessarily going to do. It's just one of the indicators that we use, which is why price is the most important thing, and the indicators are always secondary. So it's not always a sure thing. But if you go to December of 2007, we hit overbought, and the market rolled over hard, right? All the way down to where it finally hit below 30 there. And that was a low, but not the final low, right? So there's a lot. It's as much art as science, as we keep talking about. You gotta take the indicators kind of with a grain of salt. Price is the most important, and indicators are definitely secondary. So that's RSI. MACD is similar but different. Super simple, extremely effective. MACD kind of combines two trend indicators, which is the black line and the red line, moving averages into a momentum oscillator. It subtracts one from the other and gives you kind of a market direction. Okay. So as a result, MACD basically is the best of both worlds. You can follow the trend and both the trend and the momentum. So MACD fluctuates above and below a zero line, right, as the moving averages converge and cross and diverge and move the other way. So what we look at is for the MACD line to cross the signal line, right? There's a lot of math into what the MACD line is and the signal line. And if you are interested, again, go to school.stockcharts.com and you can read into it. It'll make your eyes roll in the back of your head. But if you're a math geek, you might enjoy it. The important part, again, which we're going to go to really in the next slide and the previous slide, if you line up where the MACD crosses the signal line, it's also where the histogram crosses from negative to positive, and that's where the price starts going higher. So all these things kind of overlap on top of each other, right? And so this was a chart of just the price and the MACD. The last one was a chart of the price and the RSI. This one is a chart that we put up last week, okay? We did it in the alert. Yeah, it's all three.
Yeah.
We did it in the alert. I don't know if we did it on the show or not, but it was definitely part of the alert. So the price, we had that engulfing candle day. And if you go down, you follow the line down, RSI turned over, MACD crossed, histogram crossed. Okay? That is a huge indicator that the market is likely to go lower. Because now you get both.
You got all three.
You get all three. Yeah, you get price dropping, in this case, dropping below the 10-day moving average. Volume was big that day.
Which day was this?
I don't know. It was last week.
Oh, last week.
Yeah, this is the chart that I pulled from last week. It wasn't this week.
But it shows a good example of all three of them kind of matching up.
Yes. So that's when, if we didn't have the 2 move a month rule, I would absolutely be selling that day. I didn't sell that day. But
gotta let it play out.
You got to let it play out because we have other things that we have to consider. But in terms of the technical analysis,
if you would get in and out anytime, yeah.
Yep, you would absolutely would have sold that day. Okay. So that's the idea of how we use at least RSI and MACD and price to kind of figure out when to
all
buy
together.
and sell. Yeah. I mean, there's lots of other indicators. If you go to stockcharts.com and play in there, you don't have to have an account to do it. Play in the settings. There's a drop down there that has tons of different Bollinger Bands and exponential moving averages and all kinds of different indicators you can use. These are the 2 simplest for me, and certainly the simplest to apply to the 3 TSP stock ones that we have.
And correct me if I'm wrong. This may not be, but I feel like part of that is because at the end of the day, no pun intended, all we're worried about is the end of the day, right? The closing price.
Right.
So if you were doing intraday trading, some of those other things become more useful.
Definitely.
Right. We're not.
Right.
We can't.
Right.
In the TSP. So they start to become, some of those other kind of tool sets become less useful. Not that they're not useful. They just become less useful in what we're doing. Plus, this is a really simple way to kind of see it, right?
Yes, exactly.
Yeah, that's one of the things I've learned from the way you do charting is that it's not that we couldn't put more information on the chart, but at some point, it just gets too much.
Right.
You know,
right.
It's too messy, and you start to kind of second guess this versus that. when it's if we were intraday trading, maybe you'd do that, but we're not.
It's not the next chart, but the one after that is going to look pretty messy actually.
Okay.
But it's more a chart for me than for everybody watching.
The average Joe.
Yeah, but it puts everything in there that I'm looking at in terms of our dead reckoning. All right. So, but before we get to that, the big picture, where are we in terms of the big picture? This is the thing that is really hard for me when people ask questions on Facebook. These are my circumstances, or forget these are my circumstances. I didn't follow along on the last alert. What should I do? Right? We have our standard response now to that. Response to that now is, hey, we have two really good posts. It depends, and getting in sync.
Getting in sync. Yeah.
On the smart reading tab on the site. But the problem that I have when I try to answer that question is it depends on the time frame you're looking at. So this chart it's a 15-year monthly chart of the C fund. So if you're looking at a 15-year time horizon, it's a very clear Elliott Wave 5 steps up. Okay.
Which means
right now,
based on Elliott Wave theory.
Yeah. Right now, we completed 4, and we're somewhere in 5. Okay. Generally speaking, well, not generally speaking, the rule, which it's a guideline, 1, the length of 1 tends to be the same as the length of 5. Okay. So maybe at some point when we get further along in this rally, we'll do charts that are specific to back here.
That time frame.
Yeah.
We'll
do this time frame and compare it to that time frame and see where we are. Again, it's a guideline. It doesn't always happen. But one thing to keep in mind, there's no rule that says the 5 leg has to be a percentage of the 1 leg. It tends to work in Fibonacci numbers, but it doesn't always work out that way. So we could, the 5 leg could go a little bit higher and then roll right over, or it could keep going much higher. We just don't know. But we're in a 5 leg, and that's the last major leg of this rally. So in a long term, in a 15-year perspective, we're getting to the end of this long-term rally. Okay. Don't know exactly when it's going to end, but it's closer to the end than it is closer to the beginning.
Right.
On a 15-year time frame.
Right. Right. Which the takeaway is to understanding the historical, the historical viewpoint, right? 15 years. There are a lot of indicators that we're at the end of this Elliott Wave, right?
Yes.
So that means it's something's going to change, something's going to happen, right?
Yeah, definitely.
So normally, based on it, it would go down.
Yes, on this, it's going to go down.
Right. I mean, it's just when.
Right. It's when.
Right. So that's why, like, if you're looking at this same chart and you realize you're in the 2 leg, you're not as worried.
Right. Exactly right.
You're more worried when you're in the 4. You're in the 5. I'm sorry. When you're in the 5, because that's the end of it.
Yes, you're more worried in the 5.
Yep.
The best point in this rally was like right there. That's where all the risk pretty much went away, because we didn't know what was going to happen up here, right? So that was unknown. But we did know that we had a huge, this was a 55% loss, right? We were up here at almost 1,600.
Once it bounced above that.
And we came down here to 666 actually was the low in 2009. So we had this was the 1, 2, and then we were going to start the 3. You know, you don't know unless it's in hindsight. But at some point, we had this correction.
Which is what we're going through now.
Well, this is back in from 09 to 11, right?
Yeah, no, I mean the like 3 to 4 correction.
Yeah.
To 5. Yeah,
we're going through a similar kind of correction, yeah. But back here, we knew that we were in the first major correction, coming off a huge, a huge crash right here. So once we got above this high, that's why I pointed to this part right here. Once we got up there, there was very little market risk, very little risk that the market was going to roll over at that point. If right below it, like, so if you were at that high, it could have done a double top and rolled over. But once we got up here a little further and we were outside of that range of a double top, the market risk dropped substantially. So, and then we're in the 3 leg. We'll have to go back and do a summary or a closeout basically of the megaphone pattern. But it looks like the megaphone pattern was the 4 correction. So, you know, this whole area in here was basically the 4.
And we went out of the megaphone.
Yeah, we're out of the megaphone now.
We never really kind of addressed that, but we should kind of close that loop.
Yeah, we need to come back to it. This was actually the we retested 3250. So 3250 was the top of the megaphone right there. When we got out of it, came back and retested it and moved higher. That got us. We were technically now officially out of the megaphone, but we should do a more kind of in depth on that. So now, when we got out of the megaphone, we got above the top of 3. We got 4 here. We got above the top of 3 right here. So now we got 5. Now we're in the 5 leg, and it's going to go wherever it goes, right? But at some point, it comes back down. Now, technically, it comes down to somewhere in this range right here, somewhere in the range of the prior 4 leg. It won't be in a straight line. You know, if we get up here to 5, it might be A, B, C, like that. And that'll look really, really bad to people because it on a percentage basis, it's going to be a big loss when it happens. And it's going to happen out here in 22, 23, something like that.
Yeah, but let's not just blow past that. So 22 or 23, right? We're not saying January.
Oh, right.
Yeah, we're not saying for February. Like,
no.
But we got to keep our eye on it because it's coming. We just don't know when.
Right, it's definitely coming.
But you got to put it in perspective and say, okay, that's not tomorrow.
Right. So let me just circle back to why the question is hard on Facebook. I got 5 years to go until I retire. What should I do?
Watch this chart.
I mean, you should watch the chart.
Yeah.
You should
watch the show and watch the chart.
Understand where you are on a 15-year time horizon, and then on the next chart we're gonna drill down to like a medium term. And so you say, okay, I understand that in the long term we're getting to the end, but in the medium term, which is where I trade, I just need to be, cognizant that it might get more volatile because the 5 leg tends to be more volatile than the 3, and at some point when the top is coming, but we still have some room to go, I think.
Yeah.
Okay, so the next one is really what I'm looking at in terms of our dead reckoning. Okay.
Mm-hmm.
Generally speaking, so if this count is correct, right?
So this is sort of mid-range. We were at 15-year. This is what, 10-month?
So this low right here is this low right there.
Gotcha.
Okay. So from the bottom of 4,
So this is long term.
This is long term from the bottom of the 4 leg right there. Because what we want to know is what's going to happen. How do we maximize the 5 leg, right? So we do that by drilling down into what do we already have in the 5 leg. If the 5 leg progresses in 5 legs, which is generally what happens, this is my best count right now. So I'm saying that the way I'm counting this is 1, 2, 3, 4, 5, which gives us the 1.
Mm-hmm.
All right. And then we got A, B, C, which gives us the 2. So if this count is correct, which we won't know it until we're looking backwards.
Right.
But if this count is correct, the next leg gets us to 3. Right? And then we come down.
Which is the top of that channel?
Top of that channel. Yep.
Right.
It can extend past it. It doesn't have to get all the way to the top of it, but generally speaking, it stays within the channel. We get up here to 3. We come back down to the bottom of the channel for 4, and we come back up here for 5, and then we
Roll
get
over.
the
Yeah.
That's technically how it would textbook work.
Right.
But again, it's dead reckoning.
Yeah, exactly. Yeah. But the good thing about dead reckoning is it gets more precise as we get closer. Right. So as we get closer to that target, because what we're really, our eyes are on the 5 leg right now.
Yes.
And so as we get closer and closer to the end of that, it's going to start to become more and more visible.
Yep.
Because we'll know if the count was right. If the count wasn't right, then we revised it.
Yeah.
Right.
So that's actually what we're doing right here. So if we zoom in on this, you can see the trend line, that short-term trend line that I drew.
Mm-hmm.
So let me come out of this for a second. Oh, man, I told you I had figured that out.
I was waiting.
Okay.
I wasn't going to call you.
That low right there. That low right there, if you were a subscriber to the site, you got an alert on Monday, right? And we got out because we had a couple days right, pretty much right on the 10-day moving average line, and then we closed below it, and we got out. And then the market moved higher over the course of the last few days, right? What that did basically was give us 2 points to draw a line. So now we have a trend line, and it's a little bit below the 10-day moving average line, which is fine. But now we have both the 10-day that we're looking at and that trend line. So now, as long as if you're still in stocks, for example, as long as the price is above that trend line, I would stay in.
Right. It's giving us another. How to keep using? We're going to start using all these navigation terms, but it's giving us one. Yeah, it's giving us one more. I look at it as hilltops, right? So if you stay between the hilltops, I know I'm still going in the right direction. So you just drew 2 lines now that kind of gave us a more narrow channel to be able to watch.
Right. It should stay above that trend line. It can get below the 10-day moving average now, but as long as it stays above that trend line, we're in good shape.
So are we going to talk about when the right time is to get back in?
Well, honestly, as long as we're above that trend line, if you're in, I would stay in. I wouldn't get out. When do we get back in? I'm still thinking about that.
Yeah. Yeah, and people will have to have watched some of our previous shows or read a lot of stuff that the analysis that you've done to understand why it's important. Again, if you go back to rule number 1, it's don't lose money.
Right.
So if that's your rule number 1, you get out in a different way than some people might because they might be willing to lose money.
Right.
If your risk tolerance is different from ours, then you might stay in, but you're at high market risk, right? You're at risk, and being at risk in the TSP where we can't trade on a dime,
right?
That makes the risk go even higher.
Right. So this particular chart is good because we're in the middle of the channel, so the market risk isn't super high because we're not at the top of the channel. I mean, if we were at the top of the channel, it'd be a different conversation.
Yeah, whole different. Right. Yeah. I mean, the takeaway is that we've basically made a channel within the channel. Right. So we got 2 lines within the big channel to kind of work off right now. Right. And if it starts going closer to the top or bottom of this channel,
right,
things change.
Things change definitely, for sure. Okay. So that's my that's what I'm using right now. You can see the red line in there is the 50-day moving average. Below that, you get the lower channel line. So, like we said before, this chart gets busy. There's a lot going on here, and
it could move within that big channel, in a lot of different ways, and still be on track with the 5-leg.
Definitely. Yep, definitely. As long as it doesn't get below the 2,
right?
We're good. If it gets below the 2, we've hit the top. Yeah, we're on the way down. Okay.
Which more than likely is not soon.
No, I think we got some time. But again, we get 2 moves a month, right? So and the number one rule is don't lose money. So even though I'm looking at this and I'm saying, okay, we're within the channel. You get the 10-day moving average, that trend line. You get the 50-day moving average below that, and then you get the lower channel line. I don't want to ride this thing all the way down to 34.50 or whatever, which is what the lower channel line is right now. That's a pretty big loss. Mm-hmm. Even though if I'm relatively confident that it would get support at the lower channel line, I don't want to take that loss.
Right.
So again,
your risk tolerance is different.
Right.
It's your risk tolerance.
It's my risk tolerance. I don't want to take that loss.
That's why it's just a hard, question to answer when we get that question. Yeah. And I always forward it to you because I'm not.
Appreciate that.
Yeah, I'm not. Yeah, I mean, I know the answer though.
Yeah.
It's it depends.
It does. It depends on your understanding of the market and understanding of the support and resistance lines, and your risk tolerance.
Yeah.
Yeah. And because these channels, I drew the channel lines. There's nothing that says it has to be this. It's just, again, it's a map.
Right.
Okay. So that's the medium term. The short term gets a little bit shorter, not too much. This was the 6-month daily of the C fund, and that was the day right there I was talking about that I got out. So that day, let's go back to this real quick. So those 2 days give us the ability to draw that trend line. And so let's talk about the reversal in the last 30 minutes of trading off the 10-day moving average. At some point when we were talking today, the price was down all the way to the 10-day moving average. And I thought I was going to be talking about a much different chart right now. I mean, at 2 o'clock this afternoon, we had a huge engulfing candle pattern on a daily for today. And it would have engulfed yesterday and the day before and gone into Tuesday.
And the last 20 minutes changed it.
The last 20 minutes changed the whole thing. We still had an engulfing down day, but it was nothing like what it could have been, right? And it reversed off the 10-day moving average, which is bullish. So that's why to answer your question from before, what are we going to do? I don't know yet.
It depends.
It depends. And
depends on what happens.
I mean, I don't know if I want to give it another day. I don't. Don't be really surprised if you see an email sometime over the weekend that has an alert with it. But I haven't decided yet.
Well, as always, we got to let it play out.
Yeah. Yep.
Because we don't have a crystal ball.
Nope. No crystal ball.
If we, did something right now, it's because we thought we had a crystal ball.
Yes. And we're gonna talk about crystal ball a little bit on the last slide. Okay. I have to do this first. I'm good. All right. I am definitely trainable. It might take a while, but okay.
You're getting better with the pen.
All right. That was the C fund. The S fund is a completely different story. It's just in this relentless pushing higher environment, and it's awesome. If you're in the S fund, it's pretty much Vegas at this point. It's great. I mean, you were up like over 3.5% this week. We had a huge move last week. I mean, it's rocketed off the bottom since the low in October. I put in there closing price is 11.5% above the 50-day moving average because ordinarily, this range right here right, is much smaller than this range. The length of those lines are much smaller, right? So historically, I know this is only a 6-month chart, but generally speaking, we're not usually that high. The 10-day isn't usually that high above the 50-day. When it gets overextended like it is, when it falls, it tends to fall pretty quick.
Mm.
And right now, if it fell in 2 days, let's say, over the course of 2 days, you lost 11.5% from where it is right now if it finds support at the 50-day moving average.
Right. And so a lot of market risk right now in the S fund because it's overextended.
Yes.
And if I was in the S fund, right, let's say I'm heavily in the S fund and I wanted to lock in those gains.
Yeah, that's why I said it's Vegas.
It's not a bad time to do it.
Well, we don't know. Like
right.
we have made huge gains.
Right.
Right.
And when I say it's a good time to do it, it means again based on your risk level, right? If I want to keep rolling those dice and hope for the sevens.
Yeah. Yep.
Great.
Yeah, definitely.
But at some point you don't roll sevens. Right.
Right.
And so if it's that high a market risk, it might be the time to kind of lock in those gains and
could be this day right here, let's say. Right? We were unusually high above the 50-day moving average on that day. That would have been a good day to take some money off the table. This day, I mean, you just never know, and it just keeps going up.
Yeah.
So that's why I'm saying it's
always.
It's Vegas.
Yeah.
So one thing I would be looking at, which I am looking at, the RSI can be overbought and stay there for a long time. Okay. We were overbought back here, sometime between the 16th and the 23rd of November, when the price was down there at 1,800, less than that, 1,750, and it kept on moving higher. So just because we're overbought doesn't mean the price can't go higher. At the same time, you got the MACD, which wants to roll over. So, there's some selling pressure there, for sure. But as long as the price, which we keep saying, price is the number one thing. As long as the price keeps moving higher, the price keeps moving higher. So as long as you're not banking on, this is my number, and I can't, if it goes any lower than there, then I can't afford to make a mortgage payment or whatever. Like if you're banking on that number, then it's time to take some money off the table. But if you're like, hey, I've done great, the prices keeps going higher. I mean, let it roll, Okay.
Let it roll, but keep watching it.
Keep watching it, because when it falls, once it gets below that 10-day moving average, I would be out, no question. And it's very likely that you'll get something like that. In 2 days, it dropped from through the 10-day, hit the 50-day in 2 trading days. Right, 2 trading days back there in the first 2 days of September, or beginning of September. In 1 day, it dropped through the 10-day. The next day, it dropped and bounced off the 50-day. But that's some volatile stuff, and we don't.
Sucks for us is that there's nothing you could do about it other than at the end of the day. I mean,
right.
you got to realize this is happening before noon.
Yeah, no, you can't trade that.
Yeah, you can't. You gotta guess before noon, and then 2 days later it could have done what it did, or could have dropped. Like, you don't know.
Right, that is untradeable for us. That what happened back then at the beginning of September on the S fund isn't tradable for us.
Yeah, I think it's just getting people to really understand that, right? Because we do talk about those up and downs, right, in that chart, and if you lose that perspective of, oh yeah, but we can't trade that, like it's
not possible.
Yeah, you can't, because we can't do intraday,
right?
And we got to wait till the end of the day to see what it looks like.
Okay, iFund got some really good support there at the 10-day, and then gapped up the day before yesterday. Gapped up. So the question is, there's a couple of different kinds of gaps, and again, you don't know it until it's in hindsight. We had a gap here at the beginning. We had a gap here in the middle. Is this gap that we had this week, is that an exhaustion gap, which basically means it's a last effort for prices to move higher before it rolls over? Again, we won't know it until hindsight, but the iFund is another one where if it closed below the 10-day moving average, I would definitely be out of it. And you got the MACD definitely rolling over. So just watch it. That's all I can tell you. Here's the thing that we're going to talk about next week, but I wanted to put it up this week. It's a little bit hard to see. It's, I think, harder for me to see on my screen.
Looks pretty.
Yeah, IBD again. I didn't make this. IBD did a good job. And this is just one of the slides I pulled out of it. But what is the Santa Claus rally? It is a real thing and all that. But we're going to zoom in here and look at a couple of things. The reason I put it up now, we're going to focus on it next week, but it's going to be after the fact. So I wanted to do it now and give people some time to think about it. Santa Claus rally, as it's commonly used, refers to the time between Christmas and New Year's Day. But historically, the most profitable range of days is the last 5 trading days of December and the first 2 trading days of January. So even in 2018, the market tanked. We're going to look at the how far it went down here in a second. But overall in December, market was really bad in 2018. But the last several trading days were really good. Okay, so they could call it a Christmas miracle. Market rallies in 4 Decembers roughly out of 3 Decembers out of every 4 years. So 2018 was down 9.18%. So for the month 2018, for the month of December in 2018, the market was way down. But the last several trading days, the S&P was up 1.3%, NASDAQ was up 2.1%, even though overall for the month it was down 9.18%. So all that to say, we did really well so far in December. This last week, historically, is a really, really good week. So I'm looking at our chart of our medium-term dead reckoning chart. I'm looking at the technical indicators around that, and I'm looking at going into the best week historically for the month of December for the market, and I got to decide what to do on Monday.
You got a lot of charts to look at.
I'm working towards a decision, but if you're a subscriber,
I prescribe really good bourbon.
That might help.
Might help you make that decision.
Might help make that decision. Yeah. Okay. Nope. Not okay yet. Okay.
Questions.
What do you think?
I don't know. It depends.
It depends.
Yeah. So I'm kind of excited to see. I've heard of the Santa Claus rally, but I've never paid attention to what it really means. So this will be interesting. Good segue or good teaser for next week. Obviously, we'll be doing the show after Christmas because the week won't be actually done. Well, no,
Christmas is Friday, right?
Christmas is Friday, but so we'll actually be recording when the market closes at 1:00 on Thursday, Christmas Eve.
Yes.
And doesn't come back until Monday. So we will record before, as we always do, before the show comes out on Sunday. So we'll have some good perspective, but it won't. Right. But we'll still have time of that. We'll still have some of those days left when this comes out on Sunday.
Yes.
Because it goes into the first part of the year.
Right. So the only reason I put that slide up today is because I counted back the numbers. So if we waited to put it up next weekend,
And the
we
next
would lose a couple of those days.
Yeah. So this gets people to start thinking about it.
Yeah, if you wanna throw some money towards the expected Santa Claus rally, sometime this week is the time to do it.
I hope you were good this year.
Yeah, me too.
And that way Santa Claus will be good to you.
I mean, we had a heck of a rally in December already.
Yeah.
You
well,
know.
Happy Hanukkah. Hanukkah's over, but hopefully you had a good Hanukkah if you celebrate Hanukkah. Christmas is coming. I'm never good on the dates for the other holidays, so if one of those is yours, I apologize.
Veterans Day. That's usually
I always know that one. Yeah.
It's usually vacation day for us.
Yeah. I mean, like the holiday season. I always get the dates mixed up. I just know happy holidays make everybody feel good. So I guess that's it. That's it. Sometimes I feel like we just want to chat for a while, though.
Yeah, well, sometimes.
But people are ready to turn this off after looking at all those charts, or, do they really, are they really into it? It's so hard to tell. We have a lot of, folks give us great feedback. And so usually that means if 20 people give you good feedback, there's another 50 that are really into it, but just aren't talking, to you. So hopefully you guys are getting a lot of takeaway. We're working really hard on a few new things coming into the first of the year. You might start to see some things about an ebook. That's kind of what we're calling it. We're actually trying to write a real book. That's going to take a little longer, but the ebook is helping us kind of flesh that out. You'll see some of that on Facebook, and if you guys see the link to download that, give us some feedback on it. Read it. We've got like one chapter done, or started on one chapter. We were also looking at posting the charts on the website. We're still having some trouble with the technology. Not a lot of people want to make charts easy to share, live. We can do these little snapshots. We can take a picture, but it's hard to get it in there. So anyway, a lot of good things coming at the first of the year. If you have friends that are not members yet, now's the time to do it. It's the best time of the year to give yourself the gift of retirement.
Yeah, I mean, education is the whole thing.
It really is. I mean, and then validating it against all the things that we talk about, right? And I think that's really the takeaway that I've gotten from a lot of the new members is that I see them talking about how, they're just way behind, right? So they haven't been managing, they haven't been actively managing their TSP. So now they've bought into that idea. Yeah. And then it's like, okay, well, I'm certainly not educated enough to know what to do, so at least I can follow along with these guys and potentially, move the same time as they do. But then you've also got people that are more educated that say, okay, I kind of want to do it a little different, but it's nice to validate it against what Jerry's putting out, right? So, and that's really why we built this whole thing, is because it's like a teaching mechanism to where you can get to the point where you can make your own decisions, but it's always nice to validate it. It's like in school, right? When they tell you need to know what the answer is at some point so you can validate it, see if you got it right.
Sure. See if your thought process is right to get there.
Right. It's not always one answer to everything. Right?
No,
That's what we learned later in school, is that not everything is that simple. All right, guys. Well, this has been a good show. Hopefully you guys got a lot of valuable information out of it.
Sounds good.
All right.
Have a great week.
Bada bang.
Cheers.
And cue the music.